Ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. I'm going to do 5 currencies in 6 minutes. Yes, I'm going to take an extra minute because we have non-farm payroll coming out tomorrow. I thought I'd spend 30 seconds looking at it. We have non-farm payroll. If you want to go information about that, go to our website at ForexLive.com and you'll see this infograph right there. There's actually 2 of them that you can go and look at it, but we also have other data coming out in the next 24 hours, including PMI service data coming out of the Euro region, Spain, Italy, Eurozone, UK service PMI, retail sales coming out of the Eurozone. So it's not just one game tomorrow. The unemployment, deployment statistics are going to be a lot going on. So let's get into the currencies. We'll start off with the euro versus US dollar. Not that one, that one. This is the hourly chart for the pair. And what do we do today? We got above the 126.60 level. 126.60 level, and we're above that level right now, represents the low price going back to November of 2012, 126.60 right here. Okay, let's go back to this chart. What else do we have here? The 100-hour moving average. And what have we done over the last 8 hours or so? We've been able, if you zoom in here, we've been able to stay above the 100-hour moving average, and then we've been able to stay above the 126.60 level. So guess which level is key overnight? Right here. If we stay above it, we have a chance to head up to the 200-hour moving average and the 38.2% retracement of this move to the downside right here. If we go below this 100-hour moving average and this 126.60 level, look for further selling in trading with the low in play for between now and the end of the trading day, the end of the trading week tomorrow. Let's take a look at the sterling versus US dollar next. And what do we have here? Well, we have the market coming down toward this 161.63 or so level. The low here came in at 161.65. Then we had a low right here around the 161.60.4, and then we broke through that level in this trading to the upside. We moved a little bit above that level, and the last time the market came up here, we came up to the 61.62 level and held that level, held that line. So we have kind of a floor that turned into a ceiling right here, and that's going to be our close resistance. If we move above the 160 to 63 or 64 level, we're going to look for further upside potential. And where is their big resistance? Right here against this trend line with the number of different points on it, and also we have the 100-hour moving average. That's the blue line in this chart. And so in trading here today, we actually moved above it in Asian trading. What were you guys thinking? And then the market fell to the downside. And so it couldn't maintain that break above the 200-hour moving average, that break above the trend line, which it should have, and it didn't, but it fell down. So now we're going to watch that level again. It's still in play, okay? So that comes on a break of the 63 level. On the downside, we're not far from the lowest level for the sterling versus US dollar going back to, I got to go to the weekly chart, going back to 2013. In the month of November. So that's going to be key. And if we go below the low for the week, we have the 160.90 level. Our low for the week came in at 161.11. We have the 160.90 level, which is a 100-week moving average. And then we have the 200-week moving average at the 160 even level, 160.04. We also have the 50% retracement level at the 160 even level. So that is going to be key. These two things are key. So keep those levels in mind. If we go down the 160 level for whatever reason, make sure that you understand the importance of that level. Let's look at the dollar versus yen. I'm going to zoom out a little bit here first. I'm going to take a look at now. Just focus your eyes over here at this yellow line. And did we spend most of the time above that yellow line? Yes. Maybe we went down below it here about 3 bars right here. Maybe we went down below it about 2 bars right here. But over the last 8 or 9 or 10 hours, kind of like that other chart that we're looking at that euro versus US dollar, we've been able to stay below the yellow area. In fact, we just came up to it right here, and we're seeing some sellers against that. So if you're inclined to sell the dollar yen, this is a level to sell against. Risk can be defined and risk can be limited against this level, and as long as it stays below it, we have the potential to move lower. If we move above it, then all bets are off. So that is a key level here for the dollar versus yen. Over a longer term period here, just to put things in perspective, trend, break the trend, go below the 100, go below the 200, go below this low area right here. I'd be more inclined to sell against this level and take my chances. We'll see what happens in that over the next few hours, over the next 12 hours or whatever in the Asian and London session. Let's take a look at the Aussie versus US dollar. What do we have here? We have the move above the 200-hour moving average for the first time, going all the way back to September 8th, that's a long time ago that the market was up below the 200-hour moving average. So the fact that we're above it here and have been able to stay above it over the last 8 or so hours is significant, but we are coming right down to it right now, and now it's time for you Aussie traders to test the metal, as you say, of your conviction to see if you can keep the price above that 200-hour moving average. If you can, then we have the potential to continue this move to the upside. After all, it's looking more bullish here, isn't it? But if you can't, then things might fall apart, and then we're going to look at this key support level here at the 87.64. It was a low not once, not twice, and now is the 38.2% retracement level. So that would be our target on the downside for the Aussie versus US dollar. Looking for buyers right now in that currency pair. And finally, the New Zealand versus US dollar. What do we have here? We're above the 100-hour moving average. We're below the 200-hour moving average. We've tested the 200-hour moving average a number of different times, including right here, that's 1. Right here, that's 2. Right here, that's 3. Right here, that's 4. And 5, 6, 7 or so. I think there's 7 times in the market tested that 200-hour moving average, including today. And so stay below it and it's bearish, and move above it. We could see some further move up toward the 79.68 level. All right, that about does it for me here. If you like this video and like to see more, click on the subscribe button. Also hit the like button. Also for more foreign exchange trading news on 24 hours a day, you must visit forexlive.com. My name is Greg McCloskey. Good fortune with your trading. Happy unenjoyment day. Bye-bye now.